So I was doing some research not too long ago, and I came across an article about Cathie Wood. Now, for those who don't know, Cathie Wood is the head of ARK Investments, which is known for providing various investment vehicles via ETFs. Now, her flagship fund is ARKK, but she does have several thematic ETFs that centers on different areas of innovation. Now, she's most famously known for her bold predictions on Tesla, and predicting the price to go to $4,000 a share, which she was ridiculed at the very get-go, but that prediction has since come true, and I can speak on that in a second. But she also made a bold declaration in the news, and there was a report on that with regards to her fund. And we're going to take a look at that in a second to unpack that, and then I'll give my opinion. Now, the article goes, Cathie Wood's funds had a scorching start to the year, and she wants investors to know it. The founder and chief executive officer of ARK Investment Management said Thursday that her flagship fund now gets investors better exposure to long-term innovation than most of the market's most popular growth stock benchmarks. While the ARK Innovation ETF, ARKK, has jumped nearly 40% this year, more than twice as much as the NASDAQ 100, the fund is still down more than 70% from its peak 2 years ago, underperforming the index by about tenfold. "We are the new NASDAQ," Wood said in an interview on Bloomberg TV. ARKK, which fell as much as 5.2% Friday, has posted a 5-year gain of roughly 10% versus 87% for the tech benchmark. The claim is just the latest from ARK Investment Management founder, who is known for making bold predictions. The NASDAQ 100 top holders currently include Americap technology stocks that have dominated the market over the last decade: Microsoft Corp, Apple Inc., and Amazon.com. While ARK Innovation's ETF largest holding, Tesla Inc., is also a top stock in the NASDAQ, the fund's other big positions are concentrated in smaller, newer companies like Zoom Video Communications Inc. and cancer test maker Exact Sciences Corp. So let's get right into it. So from my point of view, this is just a marketing ploy, and I highly doubt that she believes really that ARKK is the new NASDAQ. I disagree with that statement that she mentioned, and I'll tell you why. Starting with the actual fund. So if we go to ARKK's fund's website, this is what they actually describe the fund as. And it's always a good idea to check the description of the fund before making any investment in a fund. So going to the website, here's what they say. ARKK defines disruptive innovation as the introduction of a technology-enabled new product or service that potentially changes the way the world works. Companies within ARKK include those that rely on or benefit from the development of new products or services, technological improvements, and the advancements in scientific research relating to the areas of DNA technologies and the genomic revolution, automation, robotics and energy storage, artificial intelligence and the next generation internet, and fintech innovation. Okay, so that's the description of what the actual fund is. Now, let's take a look at what's actually composing the fund, or the top 10 holdings in the fund. So taking a look, we have Tesla, which is number 1, and then Zoom Video Communications, which is number 2, Exact Sciences Corp, which is number 3, Roku Inc., Block Inc. or Square, Coinbase, UiPath, Shopify, Teladoc, and Unity Software Inc. Now, just looking at first glance at these companies, most of these companies are actually good. And by good, I mean that they align to the mission of the fund, which is improvement and advancement and innovation, right? So if we take a look, I mean, we all know about Tesla's work in automation. Exact Sciences is working on next generation cancer detection and treatment. UiPath is also another robotics automation company. So they're working on innovations with regards to robotics and automation. Shopify is looking at next-gen e-commerce, etc., etc. So far, like, a lot of these companies actually look good. But then I see a company like Roku. Now, I might be missing something here, but I don't know, or it's not clear to me exactly what level of innovation Roku is bringing to the table. Someone please enlighten me down here, but that's one thing that I disagree with as far as the alignment of this company to the fund's vision. And then we also have another one like Coinbase. Now, Coinbase is a crypto exchange, so you could relate this to fintech, but then Coinbase isn't actually doing any innovation, right? Like, they're just an exchange for crypto, which is based on the blockchain, right? So maybe you could tie that into fintech or next-gen internet. but I think that would be a little bit of a reach. If you look at the NASDAQ in comparison, we have the top 10 holdings here. We have Microsoft Corp, Apple, Amazon, Nvidia, Alphabet Inc. Class A, and then Alphabet Inc. Class C. Then we also have Tesla, Meta, Broadcom, and PepsiCo. Now, if you look at these holdings right off the bat, at first glance, we can see that Microsoft and Amazon, they're key players in the cloud space, so we know all about that. You can also argue that cloud is the foundation for next-gen internet, because a lot of cloud applications, or I should say, a lot of internet applications do try to run as much as they can off the cloud. You could also argue Apple for innovation, but as we all know, the end line of chips, which were introduced, I believe it was 2 years ago, starting with the M1, they've been far and away the best consumer chips in consumer PC electronics, bar none. Never up for debate, so we'll just settle that right there. They have the M1, M2, M2 Ultra. Those are by far and away the best chips on the market for user PC electronics. So there's some innovation there. Google is synonymous with AI, and we know companies like Nvidia are also including AI into your offerings as well. So we do see some AI components in there. And then you have Meta with your Metaverse initiative, which looks to change the way communication is done, amongst other things. I believe that can have its own separate video. So, I mean, if you look at the top 10 NASDAQ holdings compared to what we have in ARKK, I don't believe you can say that those companies are replacing what's currently in the NASDAQ. The NASDAQ does have a little bit of overlap with ARKK with regards to Tesla. But then the one thing that the NASDAQ has in comparison to ARKK is that a lot of those companies that you're seeing in the NASDAQ, not only do they have some level of innovation still happening, but they are also market leaders. So again, if you look at the list, Microsoft, market leader, Apple, market leader, Amazon, market leader, Nvidia, again, market leader, Google, market leader in AI, in search engine, and also one of the leaders in AI technology, even though there's quite a bit of chatter about ChatGPT. But if you're talking about AI, it is synonymous with Google, Tesla, and I've said with your EVs and the automation, self-driving automation technology, Meta, market leader in social communication, that's social media. Broadcom is one that you can make an argument for. But if you're talking specifically about communications and wireless communications and things like that, you can definitely make an argument for Broadcom as being one of the market leaders in that segment. Now, the only one where you could actually make a case about it not really having a place on this list will be PepsiCo. Now, they're not really anything, like, I wouldn't classify PepsiCo as an innovative company. Like, that's just me, but someone please prove me wrong in the comments. But to me, I would not classify Pepsi as a technologically innovative company. So you can leave PepsiCo off this list. But my point being is that when you compare the holdings of ARKK to the holdings of NASDAQ, I believe at this point and at this current juncture, the NASDAQ holds more quality companies compared to what ARKK is offering. Again, I'm going to go back to the Roku example. And I don't mean to pick on Roku. If there's anyone out there that's a fan of Roku, that's great. But I don't see Roku as a better quality company than anything listed on the NASDAQ. And that includes PepsiCo. Like, we're not even talking about, if we're talking about innovation, sure. But like, as an overall quality company, PepsiCo is one of the market leaders in your segment. Can't really say the same for Roku. They play primarily in the streaming segment, but we already know that that's being dominated by Netflix and Disney Plus, and even Apple has better streaming offerings than Roku, in my opinion. So, I mean, if you're just looking at a holdings comparison, I would go with the NASDAQ over ARKK at this current juncture. The other thing about the ARKK fund is, I'm just going to say it right now, a lot of the activity and a lot of the positive gains that you saw in the ARKK fund happened during the COVID bubble. So again, everyone was at home, and we all know the 2020s and the early part of 2021 saw a rise in prices of basically the entire market due to the low interest rates and things of that nature. Basically, if you toss money into the market, you were going to make some money. So a lot of people put their funds into ARKK. But then again, if you look at the bubble of 1999, in comparison. We saw a similar activity where the dot-com bubble happened. A lot of people put money into a lot of these early Web 2.0 companies. And when the bubble crashed, a lot of these companies either were completely wiped out, or those that did survive took quite a bit of time to actually recover. So if you invested towards the peak, it took you a long time to actually recoup on your investment. Now, Amazon was around during that time. If you invested during the peak in the bubble, it probably took you about 4 to 5 years. Actually, let me pull it up real quick. So if I'm just doing a quick rough calculation here, just eyeballing the graph here, Amazon took about 4 years to recover from its peak in the dot-com bubble crash. eBay, which is also a great company, still around, they took about 4 years, but the most notable one here is Microsoft. Now, we all recognize Microsoft as one of the top tech companies of today, but if you invested in Microsoft, during 1999, 2000 timeframe, and the dot-com bubble, you wouldn't have gone back to even until about 16 years later or 17 years later, approximately. So that's from 1999 to 2015, 2016. That's a long time to be holding and waiting for it to recover. And my point is this: if you put money into ARKK, right, in the COVID bubble at the very peak, right now ARKK is down over 70% from its all-time high. Now, it might take a long time, like we don't know. And some of these companies may not ever recover before falling off completely. Like we actually don't know. But these companies, they might actually recover, and maybe you can eventually make your money and even go to new highs from there. But if we're looking at a pattern, if we're looking at the behavior of the market from the last technology-related crash, we see that a lot of companies either got wiped out and they never recovered, or those that did recover took at least 3 years before it actually broke even. Now, if you're a holder in ARKK, I'm not saying that you could actually recoup your money in 3 years or 60 years. The thing is that we don't know. But the point is that when you're investing in a company, you need to make sure that you have the right valuation, because valuation does matter. So if you're looking at a company and you see a company with exorbitantly high PE ratios, and you see that the forecast the analysts put on this company isn't looking to have a positive outlook on earnings for at least a few years, then that right there should be a sign that the price of the company that you're seeing at that moment most likely has those future earnings baked right in. And then you need to ask yourself whether it's worth investing and putting your money into that company at that price, knowing that the future earnings are already baked into what you're currently seeing. Or is it worth waiting to see if the price actually falls into a valuation that makes better sense to where the company is at that current time? Now, it's something that you have to think about, and a lot of people unfortunately don't make that type of analysis. They just ride the wave of people that are buying, and then that drives the price even higher before it eventually crashes. So valuation does matter, because you want to always make sure that you're investing with a margin of safety. Now, I say that to say this, that when you're looking at ARKK, the article said it's down 70% from its all-time highs, even though it is up 30% so far in 2023. But if you're looking back at the overall picture, you always have to look back at the overall picture. You can see that the recent performance does not actually indicate where the fund is as a whole at this moment. Now, this just goes to prove that it's always a good idea to have a long-term outlook whenever you make any investment. That is, evaluate the past performance, and based on present-day catalysts and projections, see if you can accurately predict the performance of a fund going forward. Now, to answer the original question about the NASDAQ and ARKK, I don't believe that ARKK is going to be the new NASDAQ, but let me know what you think. Do you think ARKK is the new NASDAQ? Do you think there's any company in ARKK that could eventually become a top 10 company on the NASDAQ? Let me hear your thoughts and opinions. I'll catch you in the next video. Peace.